Welcome to my weekly look at WTI Crude Oil, where I dive into the fundamentals, sentiment, and more importantly the technical analysis to see where the price could be heading next. Hello, I'm Stephen Ho, trader and founder of TheStopHunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So some sentiment based technical analysis indicators here, and at the bottom that grey sort of line you can see, shaded area with the blue arrows, well, that is seasonality, and we have been in a downtrend, minor one, which has married into the price, and it starts to turn up and as it heads into the new year, so a bit more bullish sentiment there. And heading on to those two lines, you can see the red and black ones. The red line is the large commercials, the black line are large speculators. What I'm looking for is the price for the large speculators to be following the actual underlying price, and the large commercials doing the opposite, the inverse of the crude oil price, which we can actually see playing out. And that's to give us a gauge of how those players in the market are feeling about oil at the moment. And it's looking like at the moment bottoming of the commitment of trade data for the large speculators and a possible upturn there, so maybe sentiment is starting to warm up once more. Inventories better than expected last week, minus 2.1 million barrels, and this week, and they released in a few hours time, forecast to be minus 0.481 million barrels, so something to keep an eye on there. Look for outlier moves to change that trend price direction. Recount numbers courtesy of Baker Hughes, looking at the US line there, plus 7 from prior count and plus 253 from last year, so still holding bullish there on the recount, and it is, like I say, a good barometer of the oil industry as a whole to sort of follow. So now into the price technical analysis, weekly chart here, line chart for crude oil, and we can see the rise over 2020 and 21, but just have a look at the Fibonacci line, the top of that yellow box there, pinged off that around about $76. I left that in there from the previous report, and it is now retracing back upwards and looking a bit more bullish, with the next upside area being about $91-92. Downsizing into that yellow box. If that 75-76 doesn't hold, then it's looking likely about 63-64 is the next stopping point. Now this is my line break chart, and it's set to the 4-2 setup. So that purple line you can see on the chart is where I would re-enter on a more aggressive stance, which is about $79. If I was being a bit more conservative, the last one of those red blocks about $84. But if you want a more aggressive trade, a reversal trade, then $79 is the mark. Daily Heikin Ashi were the signals, indicators at the bottom two there, were bearish, starting to warm up to look a bit more bullish, but still haven't quite turned there yet. Volatility picking up a little bit at 26% annual. Volume, nothing special, staying around what it usually does. And in terms of price, left on the regression bands there, the salmon pink and light blue shaded areas from previous reports, just see how that price behaves in that plus-2 standard deviation range. And we can see that it went down to the bottom of that range and is sort of consolidating, building a base, maybe to turn back upwards. There's no triggered signals yet for the two-line pink breakout box strategy as yet. Neutral there, but at the moment we could be seeing a consolidation for a possible move higher. The Renko chart used a 50 cents block size, and we can see all the signals are currently bullish. It's because of the smaller block size being a bit more aggressive than the Heikin-Ashi chart. And in terms of price, it's trading above its longer term moving average, and we can see, similar to the other charts, where that price reversed back from $75, $76 and is trading within the pink lines box breakout, so it's neutral. And if we can, look for upside numbers, then we could see a bit of a pause around 80 before going to those previous highs around 85, 86. Then it's up to about 90, 91 if it suddenly starts to pick up bullish wise. And downside, I say that 76 seems to be an interesting area, 75, 76 as first port of call, and then down to 38.2% at 70, 71, and then down to 23.6 in the late 60s. But it's starting to look a bit more bullish after that recent pullback. In terms of score, I'm going to push it back to a weak bullish outlook, with the main sort of underlying fundamental seasonal starting to pick up a little bit. Heikin-Ashi a weak bullish, bit of a mixed bag, but starting to look stronger. Same for the Renko chart, which is a more short-term look at what's going on. And because of that pullback, it's made things a lot juicier to the upside, especially in the much shorter term. And if we dive into those target areas, upside 3 to 1, 6 to 1, and downsides 1.25 and 2.2 to 1. So overall, weak bullish again, things warming up more to the upside. Let's keep an eye on those technicals to time your way into the trade. So a possible buy the dip opportunity? Well, maybe. Well, let me know what you think is going to happen to WTI next. Is it bullish, bearish? Do you agree my analysis or not? Any further thoughts? Like I say, chuck them in the comments below. Love to hear from you. And if you've liked the analysis that I've used in today's video, I'll put a link in the description below for you to follow, so you can learn more from that. And if you liked today's video, please give us a thumbs up. Don't forget to hit that subscribe and bell buttons to receive future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.